Good afternoon, everyone. Welcome to today's daily recap. And again, I'm Laz. I'm filling in for Scott today on this Friday. And not much change from what I spoke about earlier in the morning call today. I'm kind of going to rehash some of that and talk about some other things as well. I want to start. We're going to talk about the S&Ps. Just a quick start there. Let's jump over to the S&Ps. And if you remember what I said this morning, for those that had watched. I talked about this, what some would call the rip your face off rally, only because it hasn't really given. It's been very punishing to those that have been trying to, look for a top and or even get involved on the long side. It has not, this up move hasn't really given many, outside of maybe some of the intraday, scalping, shorter term. Players much of an opportunity to get involved, and I cited this morning, the one very unique characteristic about, and I'll do it again just for those that are didn't get a chance to watch, is just the lows, right? So every day we seem to make a higher low. There has not been one day in this whole up move where we don't have a higher low, and that's just the market just not really giving any traders a chance to get in. And, if you say, well, why does that matter? Well, it matters because, ultimately a pullback is defined by, a lower high. So, traders, myself included, most traders, rather than chasing price up, if you didn't participate in this first leg up, it gave you one down day, but, there was never that lower, that controlled pullback that many look for after a large move to then manage risk accordingly. It just kept going up and up and up and up and up. And again, even today, touching right into the prior all-time highs here. So what unraveled over let's say a 3 or 4 week window here back in mid-September into mid-October, within a matter of, I guess this is about 12 or 13 trading days, right back to the high. So the rubber band, trade continues here, and many people caught, kind of by surprise here. I'll put myself in that camp. I anticipated, post, or I should say, when we kind of put in this bottoming tail back here in mid-October, I definitely thought the snapback was in the cards. Did I think we would, trade right back to prior highs all in, a matter of two trading weeks? I didn't. And I don't think many people out there in the active trader space, those that watch the market on a day-to-day, week-to-week basis, thought that as well. But again, that's the beauty of what we do. And, I think there's a lot of people that didn't really participate in this up move. But again, it's kind of irrelevant. What's important to kind of pull from this is that, yes, we are back at highs. We are fairly stretched now on the short term, just like we were sitting down here, and I'll bring this up, just like we were sitting down here with the 21 EMA, which is this red line here. We're now sitting up here, so with this 21 down here. So you're going to get, at some point we will get this snapback, pullback type of trade. Because I don't think the market can really support or continue to rise at this type of a pace or slope, if you will. Just like it couldn't really support the downward trajectory it had. So I do think you have to be you have to approach this market, with a sense of caution, in that you don't want to chase price up and you don't want to chase price down. So your entry spots to how you get into a trade or get into this market are almost everything at this point. Being right, whether you say I think this stock or this market's going to go higher or lower, is really irrelevant. What's relevant here is how you tactically engage in a trade, because that's really where I think traders are making money, by their tactical engagement and their entry prices and how they evaluate risk. So that's kind of my 2 cents on the market. And it wouldn't surprise me based on today's price action. Let me jump over to the SPY. Here's the SPY, SP. sorry, here's the SPY, and you can see. Let me remove this. Again, back to old highs. Up here with this, crazy, slope of a move. A lot of open gaps in here, and again, another open gap today. If we look, on a smaller time frame, here's a 2-hour chart. You can see those open gaps, a lot more clearly. I thought today's gap up would maybe lend its hand to some selling or some profit taking or whatever you want to call it. But today's price action really just closing on the highs. It was a very quiet session given the size of the gap. Here's a 5-minute chart. Here's that gap up. You saw that initial down move, and then we saw a lot of kind of this non-existent back and forth trade up until the last maybe 15, 20 minutes where the market closed towards the high end of the range. To me, supports that we may not be done going up in this market, probably has a date with maybe a new all-time high. And that could come as early as Monday or Tuesday or, who knows. But that's, I think that's inevitable at this point as the market, kind of flirts with that going into this weekend. Very, very slow day, all things considered. And while the market sits at highs, we're going to take a look at gold for a second. Gold, and here's a weekly of gold. There's an outflow of money at gold, and gold's been, this precious metal has just been getting, pummeled, as have, several others. So you're seeing, this gold trade, and I know there's opportunity here as well. Gold making new lows this week, coming out of this, shorter term, pattern here, and breaking support. So, you're seeing very different looking trades in different spots. So pick and choose your spots, wisely of what you're looking at. And, again, the market is very dynamic. Just because the S&Ps are going up, it doesn't necessarily mean there's not opportunity in other spots, and doesn't mean you can just, throw money out there and get long because the market's going up, because that's just not the reality of this. There's a melt up in the dollar. Here's the dollar UUP, again ETF. Again, you can see this pretty dramatic rise here in the dollar. This is a weekly. This going back to roughly July, where we've seen just very small pullback and again new highs here in the dollar. So you're seeing big move up in the dollar, big move down in gold. Markets right back to highs. Oil and energy sector that we've kind of watched over the last 2-3 months. Here's the OIH. Not much in terms of bouncing back. You'd think that we would see a larger snapback after the September, October strong down move. Oil not really. Oil kind of lagging here, very much so. While the market sits at highs, these energy and oil names kind of languishing. Some of them, a little bit better than others, but you look around the horn there, and you have, ExxonMobil, some of the big energy names. ExxonMobil actually, has come back quite nicely. Apache, again, not much of a bounce there in Apache. Conoco, again, not a great, strong rally happening in a lot of these energy names. Baker Hughes, again, very, very, very much lagging everything else. So there is two sides to this coin. You got to figure out which side you want to be on, and wait for your trade. As we've seen earnings, I think Apple, obviously I got to mention Apple, post earnings, we saw this gap up, and it's been this sort of slow bleed melt up over the last 8 or 9 trading sessions, as Apple just continually day by day here slowly grinds to new all-time highs. Again, not a ton of momentum in this. You're not seeing this fast and furious up move, but it is this very methodical day by day slow melt up type of trade. But in some of the other names in that momentum space, that momentum high beta tech stuff, I talked about it this morning. Netflix, post earnings gapping down, slowly starting to rally back. Google, substantially off highs. So it is a bit of a mixed bag here overall, and I think the traders that are, traders or investors that are getting ahead here are, very much a believer in, at least the people I've spoken to that are doing, doing rather well. It's about quality, not quantity. And I think to overtrade this market is to do yourself a disservice. And make sure you're flexible with what it is you're doing. If it's a trade or a market you're just, you don't really have a handle on, step aside. Let the interesting thing about the market is that it's going to be here next week and the week after and the month after and the month after that. So if you feel like you have to be involved or you're not getting results and you continually just go back to the well, and continually, don't get the results you seek, there's something is broken, in a sense of your approach. So think about that over the weekend. And again, I hope that everybody's, enjoying, what it is the market's offering. Because I will tell you, as much as volatility can bring a little chaos, both to the downside and the upside, it does present opportunity. Stocks are moving, sectors are moving. There is, opportunity to make some money here. So I hope everybody's, bearing the fruits of what this market is giving us, and not so concerned with why the market's doing what it's doing, but rather how can I profit from it. That's really the mentality I think that's best served. With that, I hope everybody has a fantastic Halloween, and I will speak to you later. Have a nice weekend, everybody.